The Reserve Bank of India has held the repo rate at 5.25% through April 2026. This period of stability has removed the guesswork for lenders, leading more than 20 different banks and housing finance companies to flood the market, all aggressively competing for the same borrowers. This creates an immediate choice for every buyer. You have to decide between enduring the rigid bureaucracy of a public sector bank to lock in the lowest possible interest rate, or paying a premium to a private bank for a fast digital approval. To see the impact of that choice, look at this 50 lakh rupee home loan taken over 20 years. A public bank might offer you a rate of 7.25%, while a private bank quotes 8.25%. That single percentage point gap looks small, but compounded over 2 decades, it forces you to pay an extra 4.8 lakh rupees in pure interest. That amount covers the cost of a high-end kitchen renovation. It is real wealth vanishing from your long-term savings. Finding the best bank requires balancing your specific timeline and patience for paperwork against your need for maximum wealth retention. Many buyers tried to solve this by applying to 4 or 5 different lenders at once, hoping to compare the final offers. Every time a bank processes a formal application, they trigger a hard inquiry on your CIBIL credit report. Multiple hard inquiries in a short time frame drop your credit score. This paradoxically disqualifies you from the best rates you are trying to find. To avoid this penalty, you must choose your specific lane, either public or private, before you submit any formal paperwork. The public sector path, including institutions like SBI and Bank of Baroda, is built around minimizing your long-term costs. These lenders link directly to the RBI's external benchmark lending rate. When the central bank's rate moves, your interest rate moves automatically, without hidden margins. This structure allows public banks to offer lowest starting rates, around 7.25%, with minimal processing fees capped at 10,000 rupees. The trade-off is risk and rigidity. If the RBI raises rates, your EMI increases immediately. You also need a pristine CIBIL score of 750 or higher to even qualify for that baseline rate. Expect a paper-heavy process requiring physical branch visits. Processing times here routinely stretch from 3 to 4 weeks. Choosing a public sector bank means trading your immediate time and effort for maximum wealth retention over the next 20 years. Private lenders like HDFC, ICICI, and Axis operate on a different model. They prioritize speed and customer convenience. They invest heavily in technology, using Aadhaar eKYC and automated algorithms to analyze your bank statements and income digitally. While a public bank is stuck in verification, private banks approve and disperse a home loan in 5 to 10 days. This speed carries a convenience premium, with higher starting interest rates between 7.9 and 8.6%, and processing fees reaching 1% of the loan. In competitive urban markets, this speed is often necessary. If you are bidding on a high-demand property, sellers rarely wait a month for a public bank's manual paperwork to clear. A private bank is the optimal choice when losing the property to a slower competitor is a greater risk than paying a slightly higher interest rate. Interest rates are secondary if you cannot pass a bank's foundational income verification. Public banks demand rigid, traditional documentation. They require matching salary slips, employer verification, and several years of flawless tax returns to approve any loan. This rigid checklist effectively locks out self-employed individuals, gig workers, and business owners with complex cash flows. Private banks and housing finance companies offer an alternative. They use cash flow-based underwriting, analyzing your digital spending habits and transaction history rather than relying solely on tax returns. Because the lender perceives this informal income as a higher risk, these loans are priced at the highest baseline interest rates. For non-traditional earners, the higher interest rate of a private lender represents the necessary cost of securing a path to homeownership. Map your specific constraints to a banking model to find your best fit. If you are a salaried employee with a 750-plus CIBIL score and a flexible timeline, the public bank route ensures maximum wealth retention. If you are an urban professional in an urgent bidding situation, the fast digital closing of a private bank is your best tool. If you are self-employed or a gig worker, your priority is approval. Private banks and NBFCs are designed to handle your income type. Use a digital loan comparison platform to view customized offers. They use soft credit checks, letting you see your actual rates without damaging your CIBIL score. Your ideal home loan in 2026 aligns your employment type and closing timeline with your long-term wealth goals.